live on the YouTubes. So let's go ahead and go through some stuff. Maybe we're live. Maybe we're not.
James isn't going to talk.
What is going on here?
Fantastic.
There we go. Now it's live. There we go, baby. Disable the preview and OBS. Here we go. We're live. We're up. Okay. So Discord's a safe space. You can type whatever you want. Stream doesn't see it. But anything you say over a microphone will be recorded and streamed, and I'm not going to edit shit. So be on your best behavior here, boys. Welcome to the pit. Everybody else. Got banned from what?
Bro. I tried commenting. It said, please try again later.
The stream?
Yeah.
Oh, it should be working now. It was it like glitched out at the beginning. Okay, so let's go through some stuff here. Hanno's gonna hop on, and Hanno's in an AMD trade right now, so we're gonna go ahead and help him manage that as a group. Anybody else? Anybody else in a trade right now that they want to go over before we go through some of the scans and stuff? Anybody want to share a trade? I'm liking the XBI play still, consolidating below 84, back up into the nice range here, up in the upper bounds of that 84 test, currently 82.68. 3.67% is slight drawdown off of the top of the day, but that's okay. BTC is pressing in towards the end of the day here, though, which obviously we know is risk on. And Josh pointed this out earlier, but yeah, we're getting some relative strength here in BTC against Ethereum. Just got to kind of assume that there's going to be some profit taking in Ethereum, right? I'm going to go ahead and post Ethereum here. Ethereum is up off of the lows right now, 57% in like 6 or 7 trading sessions. So not necessarily surprising. Not necessarily surprising here to see this. Some profit taking here, but BTC, what a fucking performance today. What's the what's the fundamental excuse, Josh? We got something new or what?
No, I forgot what I was going to say, but no, I don't think so. Everyone's been talking about kind of pushing the FUD of Mt. Gox. They're releasing $3 billion worth of BTC in August, but I don't think it's going to have that big of an impact.
Got it. You read through that thread that Zim posted, right?
Yeah, it's wild.
It's absolutely
Just
fucking
saying,
insane.
To your creditor when they ask for money.
The fact that Zoo and what's his name, Kyle, the other guy, they're both creditors against 3AC. What's even more wild to me is the fact that they made a payment to their yacht while they were getting one of their loans called back in. So they like skipped the loan payment and instead put the money down on a down payment on their yacht. The most ironic thing about it all is when they were going to secure the funding to begin with, they used that yacht as collateral. It's like, how they went around about this shit was just, there was never a chance it was going to end up right. It just fucking blows my mind.
I did post earlier this morning in the crypto channel, just a comparison on a lot of people in crypto use the 3-day chart for kind of longer term. So instead of the week, and just a comparison of 2018, 2017 Bitcoin on the 3-day versus now. Similar, style events, it seems.
I'm looking at it right now, and I get it. Yeah, 2017
in terms of,
bull run and bear market. Yep.
That big capitulation for a few days, hours. This one happened in May. That one happened in December.
No, it was November. It was November.
Sure, November. Oh, because you're in the Bahamas or something.
Yeah, fun stuff.
So in theory, this pump we're seeing now could, if it's playing out similar, in a very different market environment, macro-wise, but could be that pump we see from the 2017 run before we go a little lower, or keep bouncing.
Could be at the very minimum, though, in the medium term. We talked about this. This is constructive price action over the last month. It's not the easiest price action to trade, but it's constructive, and obviously we've said this for quite a while that anytime the market is going to start putting in lows, specifically in a bear market where everyone's still skittish, it's not just going to be like, hey, here's the time to buy. It's going to be painful. there's going to be churn, there's going to be chop, there's going to be certain sectors outperforming other certain sectors. You're going to get a shit ton of whipsaws as the market starts to form a base in a lot of these drawdowns. It's going to be messy, and it has been messy over the last month. But if we just zoom out, like you said, on the 3-day, and we zoom out on some of these sector charts and industry charts, there's a very clear series of higher highs. And although this has happened before this year, I want to point out right now, in particular, I'm looking at the semiconductor ETF here. We did have a series of higher highs in May where we did break above and begin a potential uptrend up towards 250, only to get brought back down in the beginning of June. This has happened before, so it's not like it's out of the realm of possibility that we aren't going to set a short to medium term uptrend before breaking into new lows. Like I said, it's happened. I'm going to go ahead and post it in the Discord so you guys see exactly what I'm talking about. But eventually, it's not going to be a breakdown into new lows. Eventually, it's going to be, at the very minimum, a horizontal channel formed, potentially accumulation levels or accumulation zones across major indexes before the beginning of an uptrend, or a markup period, I should say. So eventually, one of these is going to turn into that. Is this the one? It's hard to say. I will say, from what we've noticed in here over the course of the last 4 weeks, breadth has been steadily improving, which is something that was not necessarily occurring back in May when we started hitting higher highs. There were still lots of stocks hitting new 50-day lows on a consistent basis. Now, based off of the stuff that we saw with Bukowski last week, at the very minimum, we are very slowly bouncing up and over the 200-day moving averages from a lot of these stocks. They're no longer in these steep 20% plus drawdowns. They're either starting to consolidate horizontally, or they're starting to bounce. So we're seeing constructive price action. This is the first step of something potentially bigger. And what did we see today that I was posting about early this morning that has held all day today? There are some not necessarily risk on, but riskier parts of the market traditionally within the value sphere, right? KRE. I mean, I can't overstate how potentially big this is to see KRE breaking up with, this is a Morobozu candle basically to the upside here, clearing the previous high set back at the end of June by almost 50 cents, $1. This is a big move from KRE. So for whatever reason, regional banks today decided to run. We know that banks in general have had a few good trading sessions after the miss from JPM and Morgan Stanley. Both of those banks missed. Citigroup came out with some relatively good guidance, so bucking the trend of the shitty banks reporting. Citigroup came out. XLF has responded off of those lows very well, back up, nearing a 20-day high, whereas KRE has claimed that 20-day high. So some positive stuff is happening. It's just not as easy as buy the market and wait for it to pop up. Crypto's following the same suit. BTC is up today. Ethereum is slight down as profit takers move into the market. But like I said, it's up nearly 60% in 7 trading sessions. So fuck it. Hano is on. I want to talk about Hano's AMD trade, and then we'll go through some of the other guys' trades, because Hano is in the crosshair right now because I believe, if I'm not mistaken, AMD is up near his price target. So Hano, you want to go ahead and talk through that AMD, what you're thinking about it right now, and then we can talk about the trade that you put on today if you're willing.
Yeah, so I think the best plan here is to take the profit at the 87 mark, 87, 88-ish, and then scale in potentially, or buy back when it does hit another, goes above it to 90. But I think since I only have one contract in and it is up over 43% right now, I think that'd be the best choice, and then just go back in for potential continuous play, I guess, after it.
So your plan here is to go ahead and take the profit at the end of the day today?
Yeah.
Okay, cool. I'm glad that instead of necessarily worrying about the percentage that you have on that contract, you're more worried about the price target and the level itself on the chart, which I think is the right move. Everyone in here that's been here for a while would agree with that, but that's something that's super hard to teach somebody, or at the even harder, make them unlearn it, where they go, shit, man, I'm up 80%, I need to close because I'm up 80%. And I'm like, well, is the trade idea complete? Are you wrong or right, or are you just closing arbitrarily? So you had a price target of 87. Today we hit off 86.41. You're essentially saying, fuck it, it's close enough. I don't want to run the risk of a drawdown, and that's fine. You said that you're willing to get back in if the market pops up and over the next risk level, and according to you, you said 89 or 90.
I'm just checking it because I am on my phone right now. It's around like 89-ish, more of, instead of like 90.
It's fine. As long as you have a plan, we'll go over levels and stuff when you're not on your phone, and obviously when we're not during power hour. But if your plan today is to close at the end of the day, congrats, great trade, 40% is awesome. And if you have a new level to watch in AMD, you're on the right track because you have a plan. Now for the next trade that you said that you entered, which was it today?
It was Lucid.
Lucid. Oh yeah. Okay. Let's pull up LCID. Let's go ahead and let's talk through this. I know that we've talked about Lucid multiple times in here, but I want to hear it straight from your mouth. What are you seeing in Lucid, and stops and profit targets?
So I'm seeing the continuous bounce or rejection on the that one resistance. Let me pull it up. Around 20-ish.
Yep.
And since like looking at the previous post you've made, like as it continuously tested, there's a better chance that it's going to break through, especially when the trend is overall up, I guess. So I was like, it's only $20 again. It's just more speculation than an actual trade. But if it does go well, pat on the back for me. But I guess that end of my stop loss would be around 18.5, 19.
Okay, so a few things here. First off, not an uptrend yet, but you're right. I understand what you mean by that. But for anybody else that doesn't understand that, or somebody that watches this video in the future, it's not an uptrend yet. Once you break above that $20 area and flip it with some volume, we can consider it an uptrend. At the very minimum right now, we're consolidating underneath the resistance area, and we have a period of higher lows, which is giving us somewhat of an ascending triangle. So in that aspect, you're absolutely right. We're pressing up into a resistance area. This is the third or fourth major time that we've tested it. We know that the more often times that a level gets tested, the weaker it inherently becomes because you're taking out sellers in that area every single time. And with the fractal itself, a period of higher lows shows us that buyers are willing to buy this every single time it oscillates down to the downside. So yes, you are front running this slightly, but it feels good. Everything is moving in your favor. RSI is one thing you didn't mention. I want you to focus in on that in the future when it comes to picking stocks, at least using our method. 50, we need, we want to be above the 50 RSI. It gives us that bullish momentum that we can use in our favor to justify the trade. One of the things, you said something funny, which you're not wrong by any means, but every trade that we do in here is technically speculative. So yeah, we are speculating. Oh, yeah. We're obviously trying to stack as many probabilities on our side as we can. But yeah, this trade, you're right. It's more risky than others. It's a meme stock. We know that. We know the history of this stock. We've traded Lucid back in 2020/2021. We understand kind of how it works. But you're right. We're placing a period of horizontal channel after a markdown. This ascending triangle is the fractal. Horizontal level is somewhere around $20. I have it at around 2025 or 2050. We're right there. So your price target is, or not price target, your stop loss is somewhere around 18.5, which makes sense. If we hit the lows off of the previous 6 trading sessions, we see that we've been consolidating here underneath this resistance area. At that point, this is a failed breakout, and you're playing the breakout, so you're out. Stop loss makes sense, but with an 18.5 stop, what price target are you looking for on Lucid?
Let me pull back a simple chart. I am next to a bus stop right now.
It's all good, man. You can take your time.
Yeah, so I did go for the, 27 mark, 27, 26-ish, around that area.
And you're looking at that because of the previous bounce up into this downtrend, right? The period back in March. Okay, makes sense. Let me show you one alternative method, and that's just using the fibs. Now I'm not discounting what you're doing. I think what you're doing makes total sense. We can validate it with fibs though, and see if the levels sort of match up. So right now, if you're looking at a $26 or a $27 price target, I don't have the chain up. What strike did you buy for Lucid?
I did 27.28.
Put debit spread or call debit spread?
Mm-hmm.
Okay, that's fine. All right. So I didn't know if there was going to be available strikes in between 25 and 30. If there wasn't, normally you would just be buying the 25 because it's closest to the 1.618, and also it matches up with that $26 price target. So if there wasn't the availability, okay. So cool. I think everything is right here. Throwing the fib extensions across it kind of validates that thesis as well. The I don't have the 768 enabled, but I'm going to assume it's somewhere near 1850 at 1880. Yeah, man, this is awesome. So a 786 pullback would be 1880. Shave off another 30 cents to be 1850, and a price target of 25 to 27 makes total sense. Awesome. Cool. For lack of better words, I'm proud of you because you're one of the newer guys in here, and you're totally taking ownership of finding the stocks and finding the trade ideas and actually taking ownership over it. And I appreciate it. And I hope the AMD trade, at the very minimum, built a little bit of confidence in what you're particularly seeing on the charts and trusting yourself. So, anybody have any questions for Hanno and his Lucid trade or AMD trade? Once again, he's closing his AMD for 40% plus at the end of market, and he opened up Lucid today. What was the expiration really quick on the Lucid play?
I got it really far. I think it was November.
Oh, you paid $50 for a November expiration?
No, I paid, I think, $18.
Holy shit. Okay, well, let's talk one thing really quick. Not only talking about Lucid here, but for anybody else, and I would like your input. If he's looking for a $27 move off of a $20 breakout, let's go to the upper bound of that price target there at 27. That's a 33% move at a 7.1% ADR. Realistically, that's a 4 to 5 day perfect day move, and you have lots of time on that. You might, that's an incredible value that you got for $18. You get a breakout on Lucid anywhere near $25 you can close that. You have so much time on it. There's plenty of things you can do with it. The only reason why I bring this up is if the Novembers were $18, the Septembers must have been like a penny, right?
I think, they're like 10, not even $10, like $10, $11.
So essentially what I'm asking you for is, why did you choose? Was there a thought process behind the Novembers, or did they just feel safer?
They just felt safer, honestly. I've been attacked by Theta too much, so I was like, you know what? If I'm gonna do something like this, I might as well give it time.
All right, cool. As long as you have a reason to justify the Novembers. I probably would have opened up Septembers or Octobers here, but I'm also not in the trade, so take my advice, or not my advice, but like my 2 cents with a grain of salt. Just because you're going to be $18 is cheap. I mean, let's just be honest, $18 is fucking cheap to open up a position. But if you're not looking to hold this thing, for even half that amount of time, you could have got them even cheaper, and the risk would not have the risk of the theta decay would not have been that much greater if you would have grabbed the Octobers, for example. The risk to reward would have been skewed higher for the Octobers because they're cheaper. And realistically, at an 18.5 stop out, you could have gotten away with something closer. Not saying what you did was wrong, but in the future, if you make bigger trades that cost more money, obviously the difference between a November and a September in terms of days till expiration can be very high. So you might have to make that decision in the future of, do you really, what's the reward of the time versus the risk of theta, if that makes sense? Is it worth paying more in premium to have that time if you're not looking to actively use it? That's a better way to put it. So in the future, when that stuff does come up, feel free and we can go through that. But as of right now, good trade. Like the Lucid trade. Also, thanks for showing up on the bus. Yeah, I was going to say on the bus. Thanks for running through that. Anybody else have anything they want to go through before we just start scanning for shit? IWO Diamond. That legitimately looks not terrible. At first, I thought you were Landon posting that. Yeah, IWO doesn't look like the worst rendition of a diamond, I guess. It looks better on the line chart than it does the candlestick chart. Let's go ahead and pull the line chart here.
Yeah, that's why
I mean, diamonds are always ugly. You're not going to get a good looking diamond, but I see what you're looking at. It's not the worst. This makes more sense than some of the stuff that people post for diamonds. So yeah, I can get behind it. It also confirms my bullish thesis, so why not? Let's look at IWO really quick on the line chart because I have it up. In general. Remember the close nose? An incredibly stupid pun that swing traders use all the time. For the third oscillation to the upside, we are hitting a higher high off this close. This looks good. Check out IWM. And because we're talking about this, let's go and actually pull up Koyfin. Koyfin up. Let's pull up Koyfin. We see IWM is just fucking ripping today. We're up 3.48% on an ADR of 2.3. So this is like a 2x ADR move. That's a straight up fucking lie. I just lied to you. Let's see exactly what it is. This is a 1 ADR move, which is still good. If we close up here, that's fucking awesome. Let's pull up the factor analysis portion of Koyfin. Let's get rid of large cap and mid cap and just focus on small cap. And let's go to the 5-day chart. Actually, let's go to month to date. Let's see what's going on here. Month to date, between small cap value, small cap core, small cap growth. Small cap growth is up the most against SPY at 1.83. Then we got core. Then we got value. All three of them are up, but value is lagging, up 1.18% against SPY. IWO up 1.80. What does that tell us? Small cap growth is out competing small cap value. I'm going to pull back to the 3-month chart and go through the full size and value really quick just to get a general idea right now. Small cap value is leading the pack over the last 3 months, 2.18%. Small cap value up 1.45. But IWO, man, IWO was down 7+% at the bottom of May, and we're now crossing into positive territory. An incredible turnaround. I cannot overstate this enough. I know we've talked about it incessantly, but this is an incredible turnaround for IWO. This is a big deal. We're about to hit a higher high again on the year-to-date time frame. We see that May 11th, May 12th area stamp out. We're currently down 10.28% against SPY on the year, but on that May low, we were down 17.12. So we've clawed back 7-ish% in the last month and a half, 2 months. It's a big deal. IJJ is, and small, so mid cap value and small cap value showing a little bit of relative strength here as well. Over the last few trading sessions, we're starting to buck that downtrend that we've been in as energy names started to crash. So IWN, your small cap value, IJJ is consolidating horizontally. IWN just hit its first higher high. IVE, your large cap value, is still in a downtrend. So let's actually pull this up in Koyfin really quick. Small cap value in an uptrend, mid cap value consolidating horizontally. So these are both breaking their downtrends. Let's look at IWN really quick, small cap value, just to get our info right here so we know what's been moving and what's not. Over the last month, IWN. Healthcare. Okay, well, there it is. That's why. 11.43% of the ETF is in healthcare. 12.7 is industrials, 14.5 is real estate, and 12.29 is financials. As a matter of fact, energy is only 5% of this fucking ETF. Healthcare is up a massive 20% on the month. At least the names within this value ETF. And guess what? Industry breakdown within IWN. Banks at 17.4%. REITs, 11.1. Biotech at 6.26. And what do you think is the leading industry within IWN? I was going to say biotech, and I'm fucking wrong. It's automobiles. For whatever. Okay, automobiles. Whatever's in IWN and automobiles is up 33%. Could not tell you what that is. It's only 0.24% of the ETF, so it's not necessarily doing a whole lot, but biotech's up 27.24. So IWN, we know now in the future, if it's starting to show relative strength against SPY, a majority is going to be financials, real estate, industrials, and healthcare, and not energy, or materials, which I think is important to keep in mind. Large cap value, though, is still continuing in its downtrend. So I kind of want to know what automobile name is up 32.76%. Let's check this out. Automobiles would technically be consumer discretionary, right? GRBK. What is GRBK? Green brick home building. Okay, it's consumer discretionary. TSP, consumer discretionary. Motor vehicles. TSP. I have no fucking idea what this is. TSP is up 55%. That's probably a large portion of what we're looking at right here. Looks like this was a meme stock back in 2021-ish. I'm going to go ahead and post the chart. I've never seen this before. I have no idea what it is. It looks like trash. It trades like trash. There's no point, but this is probably skewing the IVN chart. So we just saw that the semi bill got kind of smashed. Intel got bopped on that news. It's a nice recovery though, Mike. Nice recovery on Intel after the sell-off. That's a steep sell-off. 3%. Algo sold the shit out of it. Not a bad recovery. It's recovered about what? 2% off of the lows. Semis in general, though, not looking terrible. Obviously, we see the drawdown after the news was released, but across the board, semis look fucking awesome here. We've hit a higher high. RSI is above the 50. Flagship names are pressing into resistance areas. AMD, bet you NVIDIA doesn't look terrible. NVIDIA doesn't look terrible. AMD does look better, but NVIDIA doesn't look bad. TSM pressed up into a 20-day high today. We have ASML, I believe, is reporting it today after hours. No, tomorrow morning. Netflix is reporting today after hours, though. What's Netflix looking like? Not going to take a position in this, but gut says Netflix should do well. I can't imagine that they're going to come out with bad news, or at least anything worse than the market already expects. Which I think anything more than the worst ever is probably going to be slightly bullish for Netflix. I'm going to go ahead and post a chart in Discord really quick, just basic level. Wouldn't be surprised to see this perform well after hours. Goodbye, Michael. Once again, I'm not taking anything in Netflix. Not my game to want to gamble on these ER plays, but I'll stick around post market close to see what happens here. XBI is now at 4%, pressing into the high of day. End of day here. Check out communications. I mean, a lot of these beat to shit sectors. I mentioned this earlier today. Once again, not the easiest way to trade, but check this out really quick. I'm going to post the chart. Look at XLY and XLC year-to-date performance. Look at this. XLC has all of the social media companies, so Twitter, Pinterest, Snapchat, Meta. I mean, just the fucking worst dog shit stocks of 2022. And XLY eclipsed it off of the Amazon drawdown. And now here we are having a conversation on July 19th, 2022, and XLY is only about 0.4% off of taking back the second to worst spot from XLC. I mean, these are in relative uptrends. XLY looks, not unreasonable here. Speaking of XLY, this is a lucid style trade, right? XLY would be the automotive space. So I'm going to go ahead and post XLY in Discord. Go ahead and look at that. You can see today we hit a 20-day high. We're coming up on those June highs before the breakdown near 155, currently 14952. But check out communications as well. So, this entire year we've looked at communications as the weakest sector. This is one of the few sectors that broke below their 2020 highs and has yet to recover. Every other sector has either consolidated or bounced off of those 2020 highs. I'm looking at XLI right now, bounced off of the 2020 highs. Looking at financials right now, bounced off 2020 highs. Materials didn't quite get down to 2020 highs. We're finding some support here. XLY bounced off the 2020 highs. XLK didn't get anywhere close. Got real estate that is coming back up and testing the 2020 highs from the underside. So real estate is realistically doing better right now from a absolute performance based off of levels than communications. That is historically bad. And look what communications is doing right now. Over the past 3 oscillations, we have found resistance somewhere around $57. I'm going to go and draw the stupid little resistance line, throw it in Discord. Obviously, we're not trading this yet. But this matters. I mean, this is information, right? Third real-time communications is coming up and testing this $57 level. RSI is flirting with a break above the 50. Things are a little different than they were the last time we did this. Breadth is improving. RSI is increasing through this consolidation fractal. Things are different this time. Once again, I'm going to post IWM. This is not necessarily the cleanest breakout. But this is a change of, the change of rate of trend to the downside, right? We're getting that descending trend line breakout. This is not necessarily a buy signal yet, but we hit a 20-day high, and we have, at least for the next 25 minutes, assuming we close up here, this is kind of a statement piece within the small cap world. Posting KRE again so you guys can see what we were talking about earlier. This is a statement by regional banks today. Why is the market doing this? Check out what it did. I guarantee you. Ian's in here. Ian, I don't know if did you trade today? If you traded anything, you don't have to tell us the names, but you can tell us what sectors or industries you were trading in. Regional banks and banks in general showed crazy strength today. Biotech showed crazy strength today. KRE is not necessarily the most risky area of the market, but it's the more risky area of financials. So why the fuck is the market rewarding that? Industrial is a good day today. Equal weight consumer discretionary, 20-day high. Equal weight Qs testing the previous fractal high. Check this out. It's constructive. Drew the level across the Qs yesterday. And here we are. Obviously not a buy everything mode, but RSI is consolidating around the 50 during the last 2 oscillations. We're now breaking above a previous resistance area on the third tap here at 296. We're currently 297.71. We have that overhead resistance in between 305 and 315 that we absolutely have to get over before we greenlight buying, growth and tech shit with any sort of size. We do not want to get trapped in that same horizontal consolidation that we did avoid last time. Just want everyone to know we did not go out and buy growth names during that, thankfully. But we have to clear that 305 to 315 chop zone. This is step number 1 to get there. So it's good. XLK 20-day high. I'm not going to post that. RSP equal weight. S&P 500 closing at a 20-day high. This is good. RSI is poking its head above the 50. You know, and I know that Landon is long General Mills right now, which is not necessarily the worst trade, but I do want to point out that in a market where we expect risk to be coming back in, we would expect some of the more defensive in nature sectors to suffer. They don't necessarily have to fall. They don't have to lose in order to validate this thesis. But generally speaking, we would expect areas of the market like utilities and staples to absolutely underperform against some of the riskier parts of the market like growth, consumer discretionary, tech, etc. And right now, staples is up only 1%. Utilities is up 0.7%. So in a bull market, which we're not, but in a bull market, all boats rise. We have to catch the boat that's rising the fastest, the quickest. In a bear market, where we're starting to hollow out some of these areas, what we like to see are the underperformance in these defensive sectors. And unfortunately, healthcare is part of that too. But right now, biotech is stealing the show. So we're going to continue to stay long biotech. Back on Koifin really quick. Let's see if we missed anything. We went through countries at the end of, it's been 2 weeks now since last time we went through countries. We have about 20 minutes. Any questions, feel free, throw charts in the chat, trade ideas, etc. If not, I'm going to keep rambling really quick about the Koifin data, and we can wrap it up. Countries, Chile is bounced here. I went through the ETF itself yesterday. Utilities and materials are realistically what is making up Chile right now. And for whatever reason, the market is buying that. But broadly speaking, a lot of the emerging markets that are materially driven have shit the bed. If you would have asked me in April, where did I expect a majority of these Latin American countries that were popping off like crazy due to the rising costs of materials and commodities, I would have said, all-time highs. And we were on that course. Brazil was up 40%. Chile was up 30%. We had Colombia and a bunch of these Peru, a bunch of these material-driven economies, and they have all shit the bed along with the entire world, realistically. But Chile is up 12.57% year-to-date. Everything else in Latin America is down. So as commodities were getting crushed, so were a lot of these companies' stocks. In Europe right now, nothing necessarily looking like it's a buy. JC Perret and All-Star Charts did mention that potentially they were looking at buying some European stocks because of the relationship between a decade-long resistance area now turning into support. They've sold off a lot this year, and now they're looking at potentially buying a bounce if it does confirm. So something to keep in mind there. Looking at these European, the performance of the country ETFs, though, none of them are necessarily in uptrends. There's a few that are consolidating sideways now, but none of them are in clear uptrends. So we're going to go ahead and move on from Europe. Let's look at Asia Pacific. We got a weak uptrend in Hong Kong. They stamped out their lows in May. Chart looks oddly similar to some of the stuff that we're actually looking at in the domestic market. And China is still in an uptrend. It's not pretty, but GXC is still in an uptrend after stamping that bottom in May as well. And everything else is still in a downtrend. So, got one more country tab. Middle East and Africa. Egypt is down 35%. How about that? Everything sucks. Qatar is still up on the year though. So Saudi Arabia and surprisingly Turkey, but nothing's in an uptrend, so no point. See what you guys are saying. Nothing. Let's go to factor analysis. We already did size versus value. Style. Anything different here? Nope. IWF continually hitting this higher high off of the May drawdown against SPY. Momentum is suffering because they did rotate into value-driven energy stocks. Last time it was rebalanced to IJR, bouncing, small cap against SPY. Everything is moving the same way that we looked at it on Sunday, so that's good. Qualitative, we can look at some of the, Alex, this is stuff that we went over during our one-on-one. Some of the more overlooked stuff. IPO against SPY is generally looked at as a riskier area. IPO showing an uptrend off of those May lows. And let's see, buybacks consolidating. I think that's about all we need to look at. Any questions, charts, trade ideas, etc.? If not, I'm going to end the stream early and go over potential trades at the end of the session. All right, ending the stream, we'll go over trades.